In this presentation, we will start a bank reconciliation for the second month of operations. This will be part one. We'll be focusing in on reconciling the deposits. Let's get into it with Intuit's QuickBooks Online. Here we are in Get Great Guitars file. We're going to open up our reports first. Let's go on down to the reports on the bottom left. And then we're going to first open up the balance sheet report, our favorite report. Opening up the balance sheet. We're now considering the second month of operations. So I'm going to change the dates up top, those from 01/01/20 to 12/31/20. We're going to run that report. Notice here that the beginning number doesn't really matter because it is the balance sheet. That means we're focusing in on, it doesn't, whether the beginning number was January or February. The ending number, as of a point in time, as of the end of February, will be the same. And obviously I put 12/31 because there's no data after February. So the ending number will be the same here. So it's the 105,577.46. I'm going to make this a little bit larger. I'm going to duplicate our cell up top. I'm going to right click on the tab up top and duplicate it. And we're going to go through our similar process as we did for the prior month. We are going to have our information here on the balance sheet. We're going to be comparing that information to the bank statement. So you're going to want to have the bank statement in front of you. We'll give you, of course, our mock bank statement for the practice problem here. And then we'll be comparing our cash number in our books to the bank statement as of the same date. And I'll make the ending date up here. I'll change it to 02/29/20, just to emphasize the fact there's nothing after that date. But just to emphasize, as of February 29th, there is the 105,577.46. We then want to go to the actual bank statement, not just bank transactions from the electronic transactions that you just were taken off from the online banking system, because we need a definitive beginning and ending number, and the bank statements help us to do that. Does that number match the bank statement as of the end of February? If we go our bank statement and take a look at the ending number as of that same date, it's different. We got the 105,811.54, and over here we have the 105,577.46. Now you might say, hey, that's pretty close. Is that okay? But it's still, any kind of difference is still going to be a problem, because that difference can be a result of like 10 checks and 5 deposits or something like that. So any difference means that there's something that we want to reconcile. We want to account for that difference, and if we do so, we can have that assurance about the cash balance, and therefore the assurance that other cycles are correct, or more assurance that they are correct as well. So we're going to have the bank statement, which will have the beginning balance. The beginning balance will be the same as the ending balance last time. So last time's ending balance will be the beginning balance here. We're going to have the additions. The additions will be here. Those are going to be then broken out by the deposits. Then we're going to have the deductions or reductions. Those then will be broken out by checks, electronic transfers, and so on. Then we'll have the ending balance, the 105,811.54. Last time we were concerned with, because it was our first bank reconciliation, the beginning balance, and making sure that that was in there correctly with the first bank reconciliation. Now we're really focusing in on those outstanding items. You'll recall last time we had outstanding items that didn't yet clear. These are the items on our bank reconciliation for January. We had these items that we wrote in January, which weren't on the January bank statement because they didn't get to the bank until February. So we would expect then to see these as part of the items that we're going to clear in February, including this deposit, which we'll take a look at this time. That 996.45 that we wrote in January 28th is now cleared in February. Here it is in February. So that's going to be our process. Let's then go back to our QuickBooks. Let's go back to the first tab. I'm going to hold down Control, make this a bit smaller, back down to 100% to not mess anything up. Then we're going to go down to the accounting down below. We will be then reconciling. So we're going to reconcile the checking account. That should kind of like be the default now. I can go to 110 maybe. And now we have the beginning balance, which is the 109,917. That should be the beginning balance on our bank statement. It pretty much has to be if we reconciled last time properly. Last time we reconciled to the 19917. Therefore, our beginning balance should be also 19917. Our ending balance is going to be 105,811.54. So I'm going to put that in here, 105,811.54. Did I get that right? 105,811.54. 0.54. Yes, I think that's right. And then our ending date is going to be 02/29/20. 02/29/20. As we discussed last time in January, I'm not going to be putting in the service charges or interest because this kind of makes a journal entry that I don't really see, and I can't see that it checks it off as easily in the next screen. So I would rather just do that myself. I'd rather, if I'm off by a service charge or interest, then I'll simply record the transaction once I recognize that. So what I'll do is I'm going to just go to the next screen here. I'm going to say that's okay. Let's start the reconciliation. So then we're going to go to the reconciliation screen where we're really focused in on this difference column. We want this difference column to go down to 0. Once it's at 0, we'll see these buttons up here. I think they turn green, and that'll give us an indication that we're good to go. So what we have here is the statement ending balance, and then we have the cleared balance, and then we have the beginning balance here, and then the payments and deposits. You'll recall down below that we can see all transactions. That's the default. Then we can focus in on the deposits if we so choose, the payments if we so choose. That's what I would recommend doing. That typically makes it easier. There's usually less deposits than payments, so that's usually an easier place to go for most type of industries, unless you have a lot of like small deposits like credit card deposits or something. Then it gets a little bit more confusing. But in this case, we don't have many deposits. So remember, our strategy is always to be going from the bank statement to the books. Bank statement to the books. Why? Because if something's on the bank statement, it should be on our books. If something's on the books and it's not on it may not be on the bank statement. So if it's on the bank statement and it's not on our books, we probably need to add it to our books. The bank's probably right. If it's on the books and it's not on the bank statement, then it may be okay because that's what we're looking for. We're looking for those outstanding items that are on the books and not on the bank statement. All right, so this first one, we got the 996.54. So I'm going to go back over here. There's the 996.45. Is that the right? Yeah, that's right. I just said it backwards. All right. So there is that item. Note that this one was written in January. So it's showing up here, even though it was written in January, because it was in January's bank reconciliation worksheet like this one, but we didn't check it off because it didn't clear the bank statement in January, and therefore it's still on the books. So we're going to clear it at this point in time. So then I'm going to go back over here and say that let's make that one green. I'm going to green that one. That one's been greened. And then we have the 17,000. So 17,000, there's the 17,000. Looks good. Going to go back to Excel. Going to make that one green it. I'm going to green it. And then we're going to go to the 204750. So there's the 204750. That looks good. Going to go back to Excel and green it. Now again, you can go back and forth and do this, a little bit, go from back and forth, but just if you get confused, then it's easier to think about going one way, right, from here to the books. Now, if we go back to the books, we're going to say, all right, there's one we didn't check off here. There's the one why didn't we check that one off? That one should be checked off. But it could be it's on the books and not on the bank statement that it's outstanding and that the bank hadn't yet cleared it yet. We wrote it on the 26th. You would think that it would have cleared by the end of February, but maybe it just took a little longer to clear, and we can check that because note we're reconciling as of February end, but we must have the bank statement to do that, so it's probably the date that we're actually doing this work is probably sometime in March, and therefore we can jump on to the online checking account or whatnot and see if this has cleared in March. If it has, then we're okay. We're like, that's okay. It's still, we got the money. It's just cleared in March, and therefore it's just a reconciling item in February. Those are the things we're looking for in order to reconcile. Now I'm going to continue on with this. Next time we'll go to the check side of things, the longer side of things. And again, you can kind of remove yourself from the bank reconciliation halfway through it, go to lunch, do something else. It won't delete the bank reconciliation, hopefully. I'm going to do it here and we'll come back in. Hopefully it won't do it. So I'm going to go back up top. I'm going to go to the dashboard, and then we'll come back in next time, and we'll continue after the break.